10-year note yields end the week moving lower. Today getting back below 430, down about 7 basis points on the day after a weaker than expected non-farm payroll number, as well as larger downside revisions to previous numbers that came out over the last couple of months. Now, what this did after we saw yields moving lower, we saw those rate cut odds move higher, only slightly, but back above 80% odds now for a 25 basis point rate cut at September FOMC. So after seeing those expectations move lower down to about 50-50 some time ago, they have now come back up as the jobs market starting to show a little bit of weakness, and the Fed, which has talked about keeping rates higher for longer, may be starting to thaw that theory a little bit as we move forward, as the market continues to price in more aggressive rate cuts. And again, seeing yields move lower on the day, back below 430 to end on the lows of the week. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that volatility made a big move lower to end the week as yields moved lower, and after we got past the key non-farm payroll number from this week. Lastly, let's talk about what we have next week. It is a very busy economic calendar. We do get the Fed Chair's testimony to Congress, his semi-annual testimony. He will give that on Tuesday and Wednesday. Then later we'll get the CPI and PPI number. And mixed in there, we'll get a 3, 10, and 30-year auction. So a lot happening next week, not only with policy and inflation, but also with supply. So after a busy week and a U.S. holiday, we saw yields kind of moving lower for most of the week, ending back below 430 ahead of next week's busy week with inflation, the Fed chair, and auctions.